Good morning. It is Tuesday, August 25th, 2020, and this is the Q&A session. I have a few things prepared. There were not many questions on the chat or the Ask Me Anything forum at Fundamental Trends, so we're going to talk mostly about options today. And I've been using Stock Rover to do some screening, and one of the screens I use is just a growth screen that I rank by 3-year sales growth. Really just want to see who's been successful recently at increasing sales volumes. Of course, that'll be skewed for a lot of companies very recently, but 3 years is a pretty good trend. And you'll notice some of these companies do very, very well by those metrics. So Roku, CRISPR, these are companies that I think we want to pay attention to. Exact Sciences is a company that I made a bunch of money on, and it's coming back to us again. It's in the 70s, which is about where I said to sell it a couple of years ago. So we'll see how low it goes. We'll chart that out because Exact Sciences is something I'm becoming interested in again as part of a biotech basket. A lot of biotechs in here. A lot of them are skewed to the upside because of the money the government has doled out. Shopify, right? That one's gone through the roof. Weirdly, Centennial Resources is doing all right from a sales standpoint, but that's because they started from essentially zero. So again, you know, if your baseline is zero, your growth rate will look okay if you add anything, right? And that's what happened there. Some of the other companies that we like: SolarEdge, Alibaba, Square, Mercado Libre. You know, Tesla sales have gone up, but their price has gone up 10 times more. Zendesk, T2 Biosystems is something that we flirted with in the past, traded it. Viacom, I think we have to pay more attention to. Enphase, stock that we were in that I recently got out of just because I'm a little bit concerned about the management. There's no reason to mess around with management that you're not sure about. Brookfield Asset Management's on our list. It's something that Dividend Sleuth follows pretty closely. Facebook, Dave Zanoni likes them. I just think that they have a world of regulation coming. Although I think they're probably going to have to spin off Instagram, and I think that makes them some money. So we'll see. I'm sure they get through it. It's a platform that's not going away. Although I'm not really sure why they haven't drawn better competition. And that concerns me. Suggested a while back that we might be at peak Amazon. Basically, revenues and earnings have been pulled forward by several years. And now they're getting to a CapEx phase where they have to buy more warehouses and do more physical development because there isn't extra capacity in the economy anymore. So if you take a look at LoopNet, which is a commercial real estate website, and you take a look at the rents that you have to pay to rent out a warehouse, they're pretty high again. I remember looking to rent out a warehouse to put in some batting cages for a baseball league. I'd say probably 4 or 5 years ago. No, I take that back. It was probably 7 or 8 years ago, and I could get warehouses, you know, literally for $1 a square foot if I agreed to rent it for 90 days or longer. And we ended up actually doing that. Somebody in our league ended up renting a warehouse over the winter, $1 a square foot. And I think they capped it at like $800 a month. You know, we had enough room to take infield practice and put up 2 batting cages and a couple of mounds. You can't do that anymore. I mean, there's not a warehouse out there that's empty. Industrial stuff is full too. So Amazon's going to have to spend a lot of money on their logistics. And I don't know that the share price is going to do much better. I think the share price is pretty priced to perfection. I took JD.com off of our list actually just yesterday. I'll take it off here too. I just don't really want to deal with any of the China stocks. I'll watch Tencent because they're so incorporated into that economy. And Alibaba, I think, is the best stock over there. So I will try to get into that, even if we have to do it with an offshore brokerage link. Take a look at some of these, and they're doing all right. As you get to the bottom of the list, you see the laggers, Devon Energy. SunPower had that big shift, but if you look at the last year, all of a sudden they turned back up. So you can see here, bottom right of the screen right now, sales change for 1 year is 12.7%, even though for the last 3 it had been slightly negative. Devon Energy is down here. I don't even know if I have CLR on here. They may be on here somewhere. That's a company we'll talk about today. So we're going to talk about shorting some of the oil stocks. We'll actually start with Exxon, seeing as they got removed from the Dow Jones Industrial Average, and now the stock is down about $1 today. The January 42.5 puts is what I own. I have a handful of the October 40s as well. My August 40s, I ended up getting like a nickel back for. I think I spent $1.50 or almost $2 on those, so I took a loss on that. So I think I spent 99 cents on those. I take that back. I need to make at least $1 on these puts to be even, and $2, $3, $4 would be swell. Right now, I'm just a little bit in the green after this dip today. Something to keep in mind about all these oil stocks is when you consider the competitive landscape, any competitive landscape, would you expect the lower cost producers of whatever good or service it is to not put the pedal to the metal in order to make as much money as they could? Or would you expect them to allow market slack so that the more expensive producers can do well? Ultimately, I think that shorting the oil stocks is also a bet on Joe Biden winning the presidency, so that is a bet speculative. I'm very confident in that bet. You don't have to be to make this short, because basically everything out there, when you go from the secular trends to the government policy to international policy to the fundamentals of the industry and the companies and the technicals, there is nothing in favor of oil stocks staging any type of significant rally. COVID was just an acceleration of what was going to happen over several years. And now we are to the point where we are seeing massive shifts in corporate policy to have people work from home. Some companies are like, oh, we're not sure if we want to do it. And then COVID lingered on, and now we're going into the flu season in a month or two. We don't have a vaccine. The therapeutic that they announced with the plasma the other day is kind of a joke. So, you take a look at what's going on, and it comes back to what I've been saying for months, and that is we probably don't have a mass adopted, distributed vaccine until the second half of next year. Now, I think it might be earlier second half of next year, but I still think second half of next year. So in time for school is what I'm thinking could happen. I think you might see a lot of kids getting shots like the first day of school. They'll send them to school and that'll be shot day. I do think that between now and then, though, there's a lag where the economy is going to no longer support the stock market. The V-shaped recovery idea is out the window. The Federal Reserve is flattening their balance sheet. Powell is going to come out on Thursday and talk about inflation targeting, same stuff that Ben Bernanke did, on steroids probably. The problem is that Janet Yellen had something in the New York Times basically saying, the Fed's done about all it can. Anything else will just really exacerbate wealth inequality. So Congress has to do some fiscal policy, and I'm not so sure we see another bill before the end of September, which is when the government funding deadline comes up. So I think that all comes to a head at the end of September. I think that's when you see a bill. I think it's under $2 trillion. So I don't think the Republicans and Trump will go over $2 trillion. And I think that the Democrats will have to cut a deal so they don't get blamed for anything. We'll see. In any case, there's a time lag that I don't think the market appreciates between when the economy picks up and trying to float this stock market. So while I do think that the stock market in general is neutral to negative at this point, we can avoid some of the neutrality, that middle of the market stuff, by just focusing on the sectors and industries in particular that aren't going to do well really under any circumstances, and oil is one of those places. So I hope in the last month, since I've been talking about this trade, that this is right where I suggested doing it. It was right pretty much at that peak, is buying the first set of puts on Exxon, which they didn't quite make enough money because they deteriorated so fast. I should have gone with longer puts. So right now my puts are 42.5s in January, and I have a handful of 40s to October, but I don't think I would buy those anymore. I'm looking for a way to get out of those. So the January 40s or 42.5s, I think that that's pretty good bets there. The 42.5s are like 450, 475 right now. The 40s would be a couple bucks less. So it depends on what you want to spend and what you want to speculate on. But ultimately, I think the breakup of Exxon is pretty much certain at this point, and the getting rid of the dividend is pretty much certain at this point. The market doesn't believe it. You have all these hangers on who are like, "Oh, but I made money in Exxon a really long time ago." And for the last, let's see here, going all the way back 20 years. So anybody who's had Exxon for 20 years or less hasn't made money. You've gotten some dividends. Big deal. But if you were buying up here, up here, up here, you're screwed. You're never getting your money back. You ought to sell your Exxon stock and short it, and that might be a way to make your money back. So I think that Exxon is going to go down to, I think it's going to break through these $30 support levels and go all the way down to 10-ish quickly. I think if Biden wins, it happens by next year. Accidental, not even a lot of point looking at the long-term chart anymore, right? Just need to look at these retracements. Accidental is probably going to zero. I don't know if there's even a way to buy these options anymore and have any speculative value. That's what I've been looking at this morning. So if you take a look at the January puts and you want to say buy the $10 puts, you can get them for under $1. And if the stock goes to 5, you've made 500%. So again, throw 1 or 2% at that. If you want to speculate on accidental making a run at sub 5, I think that that's pretty likely. I think accidental declares bankruptcy. They just have too much debt. It's impossible. It's impossible for them to pay off their debt. And unlike a sovereign nation, which can print money, Occidental can't. And for whatever moronic reason, they've held on to the CEO. I think you will see the CEO get fired at about the same time they declare bankruptcy. She should have been fired. The board should have thrown her out before she made the Anadarko deal. I was neutral to positive on that deal. But they should have known better than me, right? So that's what they live in, 100 hours a week. The reality is that the assets they ended up acquiring with COVID, they have no value. So I don't know how they survive. They're the biggest or second biggest producer in Niobrara, which is Colorado, and there's no value at all there anymore. There's no value at all. So I'd say get rid of Occidental. Devon Energy, same exact story. They're probably going to zero. And, if you take a look at the Devon January puts, you can buy the 10s for, let's see here, $1, right? And there's a whole bunch of them at 974. So I forget exactly why that happened, but there's a lot of bets on Devon going down too. So I think Devon Energy is another one that goes to zero. They have to declare bankruptcy. Again, if you take a look at the debt of companies like Devon, right? You pull up their research report over here at any brokerage, but I like this one, the summary. Search for debt, quality scores, nothing. Debt to equity. So debt to equity is rising, right? It came down with higher oil prices, and now it's going back up. And what's the problem that these companies have? These are another company that's in the Niobrara and other basins in the United States. They have zero growth. How do they pay off their debt with dramatically reduced? There you go. Net debt over $3 trillion. How are they going to make $3 trillion in, say, the next decade? How are they going to do it? Look at that operating income, right? It's going to take them 30 years to pay off that debt. There's not 30 years left of oil, right? So they really need to get this debt paid off in 5 years. How are they going to do it? How do any of these companies pay off their debts in about the next 5 years? Can't be done. Can't be done. In Saudi Arabia, if the price of oil goes up, they're just going to pump more. So the other company is Continental Resources, which actually stopped drilling. I think that they're pretty ripe. I think they're going to zero as well. You can increase their earnings estimates all they want, but it's not enough to pay down the debt. So these companies, they keep getting divested by big investors. And this rally here is a chance to reestablish the short positions. And again, I think this one probably goes to zero. Harold Hamm would like to take it private. So, maybe gets down to $1 and he takes it private for $2, something like that. And that's maybe a case for Occidental too. Maybe Occidental gets down to $1 and then, Berkshire Hathaway and Carl Icahn team up to take it private, something like that. Most of these oil companies are going private. But I actually think the most likely scenario is they get bought out of bankruptcy. Because why would you take a company private and absorb the debt, right? Why wouldn't you declare bankruptcy and just become a partner with the debt holders? Why absorb that debt that can't be repaid? So I think the January's puts on all of these as a play on Biden winning the election, and just, you have everything else in your favor as well. Secular trend is in your favor. Government policy is in your favor. Even if Trump wins, there's only been a slight rollback in regulations. So, you take a look at, President Trump wants to keep the price of oil down and he's allowing drilling in public lands. How does that help these companies? Price of oil is still down, right? So there's not a single argument in favor of oil, not a single one. So I think that these are where you bet against the market because you have a stack of negatives on these, and they've all had rallies and they can all come back down. So I would buy the puts that are roughly at the money or just a little bit out of the money, and go to January. And if they haven't, if Trump wins the election, these stocks probably pop a little bit, and then they'll settle back down, and sometime a few weeks later you just close out your position and you wait for the next opportunity. We've been talking about gold for 2 years. We've had our first rally and peak, parabolic chart coming back, probably jitterbug back down to here, but Powell is going to talk about inflationary things. So I think the bet right now is go ahead and sell the puts, like the 175 and 180 puts to January. The January puts for at 180 are fetching like $10 a share. The 175s, a little, something like 6. So I think that you can get an exercise price in the top of the buy zone, a net price, right? If you sell the 175s and take the $6, that gets you down to 169, right in here. We've been talking about 173 is kind of the first spot to buy. So as long as your net price is under 173, I think you're in good shape. I think ideally you'd like your net price to be down here in the 140s. I just don't know how realistic that is, given that the inflationary policy, I just think it's going to be hard to shake people out of their gold positions. I really do. So if you can get a net price around 160-ish right in here, see that jitterbug, that support level, that 1.68, that's at 161. You get a net price around 160 something, I think you're in awfully good shape. So I would take a look at those. I don't know if I make the trade today. I think I probably make some of the trades today and then hold back to make another batch if it does have a sell-off for margin calls. Other puts that you can sell right now, again, somewhat of a play on Biden. If you're looking to sell puts on something, we've been talking about SunPower for quite a while. Don't want to move. Okay. As far as it goes, I think that these levels in here are pretty strong. So I don't know that we're going to get SunPower much under 10 again. If it is, it's for a hot minute. So you probably drag this up to here. For the purpose of selling puts, if you get a net price of 10 or 9 or 8, I think you're in pretty good shape. When you take a look at the SunPower puts, January, again, you're getting pretty good time value. You can sell the 10s and get $1.25, right? That's 12% to January. That's a pretty good deal. I'll probably do that today. And then you have a net cost under 9. What other stocks might you want to sell some puts on? If you buy puts on SunPower, Julia, you're not allowed to do options. If you what puts, what are you going to do with those puts, Julia? You're going to buy them or sell them? Yeah, you're going you sell. No, it's not. People make those semantic mistakes all the time, and it screws them up when they look at their stuff. The Maxion spinoff, I believe, is any day now, right? So the answer is that there's an automatic adjustment. So I wouldn't worry too much about it. That's why companies like, you see those options out there that all of a sudden, instead of being $10 or $9.74, right? They make adjustments. So it doesn't much matter. Or you get rights to Maxion as well. No, it doesn't matter is what I'm saying. The options are adjusted for strategic transactions, so it doesn't matter. So I was looking at that new 5G ETF, and I'm going to start doing portfolios on here based on the ETFs. But I think Calyx is something to take a look at. We've talked about that recently. Let's come back just a little bit, right? I had that parabolic move. If we get a sell-off and it gets down back into the middle teens, right? This is not an option for today, but rather an option for soon. I think you can sell the January puts, and I think you want to sell them before the end of September. But if you sell the January $15 puts, right now you get $1, give or take. I think that might go up to like $2 by sometime in the next few weeks. So if you can target a net purchase price between here and here, right? Because I think that this is pretty strong support. Get a net purchase price of 11 or 12-ish. I think we're in pretty good shape with Calyx. Their sales seem to be ramping up. and there'll be a bit of a pullback here, I think, in general. But I think that over the next 3, 4, 5 years, they're just going to drop a ton of money to the bottom line. And I don't know how long that lasts, but clearly this has the attention of enough people that it can have big run-ups. And I think that you might want to get in on that. If it does drop all the way down here, I think you might just want to buy it at like 14 if there's not huge momentum to the downside when it happens. You know, and everything's about rank ordering, right? You only have room in your portfolio for 20 to 30 stocks, and, you know, as few as a dozen if you're just having it as an add-on to your ETF portfolio. Again, anybody with over 30 stocks, you're doing it wrong. And you just have to stop hearing that you're doing it wrong, accept that you're doing it wrong, right? Stop being offended and just change what you're doing. More than 30 stocks is too much for anybody to handle. It's just the way that it is. You know, you can't even find companies with staffs that have that many stocks. So you go through all of these and you take a look at the buy zones. So Ford, I should have told you about Ford again. Ford is currently in its buy zone. I think that you could nibble on the stock and sell puts. I think you do both. And if you can somehow net out a $5 cost basis, you are a huge winner, in my opinion, because I think this stock will set new highs in this decade. I think Ford is a potential 10-bagger. They just have so many good assets that they can sell and utilize that as they climb this wall of worry, right, they're like the rungs in a ladder. Once they get to here, just bam, 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 all the way up. And I truly believe that they set all-time highs this decade. Other stocks near their buy zones, I think you really should be looking at Landstar. Take a look at what's going on with some of the other logistics companies. These guys just aren't giving anything back, though. But again, parabolic. So you get a pullback under 100. You know, you probably just buy the stock. These guys are dropping all kinds of money to the bottom line. This is, right, I think this is the establishment of the new range. So if you get down to the bottom of it, I think you buy. Logistics is a thing, right? It's going to keep being a thing, and these guys are growing. PTC, again, another company that's not giving anything back, but in a world that's looking for automation, right? You know, this is a chart that you'd look at and go, what the hell? All it is coming back, right? It's coming back to this reestablishment of the trend. What have I said over and over and over again? 2016 is kind of the demarcation line, right? Does it retrace all the way back to the last election? I don't know. Somewhere in here, and I think that ultimately this stock starts going up pretty substantially based on what their business model is. Pulte, I think that's another one that hasn't been given anything back to us just yet. I think this is the easiest one for you to sell puts on and buy the stock. Again, look at these parabolic charts. Look at where it came from. To think that it's not going to at least retrace about half of that is, I think, just completely inexperienced. It's going to retrace about half of it. It'll get into here for sure. That's why I set these where I do. Look at the structural nature of that, right? Now, does it get all the way to the bottom? I don't know. I don't know what to think about the lag between the economy and the stock market. I don't think they can hold the stock market up long enough to discount the fact that the economy ain't going to come back till 2022. And ultimately, I think that the market has a breadth where it either gives back half of the gains, give or take, or most of the gains, or all the gains, or more, right? We will see. I don't know, Denise. She asks, is Invesco struggling because they manage such a large volume of bonds? What have I said about Invesco over and over and over and over and over again? Every single time I talk about Invesco, I say one thing. What do they need to do? That's right. They need to fire an ass load of people. So if Invesco fires an ass load of people in September, October, right, into the earnings, then I think that they're a great buy right here. They have too many people for what they do. They do not need anywhere close to the number of people they have to do what they do. So it is clear to me that what management has to do. So if management doesn't do it just to save their own thing, right? Yeah, take a look at their expenses for labor, Denise. Bonds has been making them money. The cost of labor is killing them because in the old mutual fund model, they had to have all these managers and all these support staff. I think they could manage this company with, oh, let's see here, 5 times 5 times 25, 600 people max. Seriously, I think they could manage this company with 500 or 600 people, total maximum. And I actually think they could probably do it with about 150. You don't need a lot of people to run this company. You just don't. So if I'm the CEO of Invesco, I'm going to all my all-stars and I'm saying, here's the deal. Pick your 5 best people and fire everybody else. So when Michael Price, and I know this company intimately, when Michael Price sold his mutual fund company to Franklin Templeton, right? So the mutual shares series and mutual qualified and mutual discovery, all those funds that are called the mutual series over at Franklin Templeton, 20 years ago, Michael Price got $1 billion to do that. And he had a very simple structure, which was each fund, well, it was him at the top, and then he had 5 generals. And then each one of those 5 generals had 5 support staff. That was it. There was about 35 of them, a couple secretaries. 35 people split up $1 billion. Now add zeros to the money. Why would a financial firm need just person after person after person? Originally, it was because of the sales, right? You sent out all these salespeople to the brokers. What's the channel now for doing investments? It's all online. If Invesco fired half of their staff, I think the stock goes through the roof. Every analyst out there knows what they have to do. And that's why, if you listen to the conference calls, everybody knows it. And management is holding off because they don't want to be seen as being draconian. But the reality is for them to make money, they need that share price to go back up. The only way for that share price to go back up, because they have great products, right? QQQ is like the, biggest non-S&P 500 fund, just about. They might be second. Their factor funds are very good. So I think that they fire a ton of people imminently, and this stock rises. So I think you should have a position in Invesco. That's what I think. I've been telling you that. This drop here with COVID, at some point earnings matter. By cutting their capex by a ton, that lights a fire. But the uncertainty is, how smart is management? How much are they trying to save their own soul? Right? The company's not in bad financial shape. They just got to figure out a way of dropping more to the bottom line. They should fire a lot of people, do a little bit more advertising. That would be it. That's all they need to do. So I don't know if labor's on here. What they call it on here. But you can just see, and there's some rocket fuel behind it because it still has some shorts. Take a look at the balance sheet. $2 billion. Working capital, they've had a problem. They need to just fire people. It's really that simple. Yeah, so the Dow Jones Industrial got shaken up. Exxon is out. I'm surprised that Raytheon and Pfizer are out, to be honest with you. I'm not a big Pfizer fan. You knew that. I don't really pay too much attention to the Dow Jones Industrial Average. It's not that important of an average. what Dow Jones should do is expand the Dow Jones Industrial Average to 50. That's what they should do. And they should probably make it market cap weighted. So that's just my opinion, but whatever. Tradition, right? There's whole famous plays about tradition, right? So, all right. I don't think it really hurts Raytheon and Pfizer. I don't even know that it hurts Exxon that much. I think it's just a wake-up call to people that, hey, Exxon is on the skids and it's going to keep skidding. From 40 to 10 is a huge drop, right? 75%. But think about what Exxon's already done. They were at 100, now they're 40, so that's a 60% drop. What does it take to become a 90% drop from 100 to 10, right? Just this last move, that's a 90% drop. So Exxon, they won't go bankrupt. They'll split the company up. But some of these other oil companies, I think it's dollars to donuts, they go bankrupt or they go private at single-digit prices. Very low single-digit prices, under $5 for sure. It's a real easy basket to short. Hold on buying Exxon January puts for now. I don't know what that means. I mean, if you want to try to find a better price, I think that you're supposed to scale in, right? You should have bought some a few weeks ago when I was talking about it. I guess you could buy some more now on the confirmation that the stock sucks. You could buy more later if the price goes down, pyramid it up. If you're going to try to trade, there's some certain things that I have said over and over and over again, and I get tired of repeating them, but I know there's new people. You have to take your positions over time, a little at a time, until you build it up into the position you want. Because you can't figure out, because nobody can figure out exactly what the perfect price is. There's no such thing as the perfect price until you look backwards and go, oh yeah, I should have done that. Hindsight's the only thing that gives you the perfect price. But when you see a chart, right, it goes like this, falls off a cliff and then retraces about half, we know that that's a standard retracement. So right when it hit this line, I was as much as I can pound the table, I was saying buy puts. People are like, I'm not so sure. Because they're like, well, but he didn't buy the bottom. Well, you know what? Because that's not the bottom. That was just the bottom that day. So even if you take a look at SPY, take a look at QQQ, because that's the one that I said all along to buy on a crash. Oh, whoops. He didn't buy the bottom. He didn't buy the bottom. Whatever. Seriously, fuck off. People who say that to me on the message boards, they go fuck themselves. I made millions of dollars. They turned their $600 stimulus or $1,200 stimulus check into $2,000. Kiss my ass. Seriously, I've never been the most diplomatic guy. I've tried, but people who doubt because you miss a trade, whatever. Go and doubt all you want. Doubt all you want. This is not realistic. Most of this was not realistic. I was saying, go back and read my articles. I was saying all along that this was contrived the whole time. And now we have the Fed pumping it back up. What about this not being bullshit? Doesn't just scream out to people. This whole rally under Trump has been bullshit because there's no organic growth in the economy. We've taken on twice as much debt, or 3 times as much debt, as we've gotten growth. And the Federal Reserve balance sheet has gone up $6 trillion. The idea that you ride it, I get it. And like I've said, if you're a good trader, you can do it. But 9 out of 10 people are not good traders. So I'm coaching you to take your profits and let reality happen. Oh, you didn't buy the bottom. That wasn't supposed to be the bottom. The bottom should have been way down here. But we're afraid. We're afraid of letting the market do what it's supposed to do, which is shake out the bad and the ugly and the unprofitable and allow innovation. But we have this tangled web of shitty healthcare that doesn't allow entrepreneurs to do what they want to do. and tax breaks and regulations skewed to the big and against the small, because the small can't afford to do it and the big can. And then they give tax breaks to the big anyway that the small guy doesn't get because he's socked with income taxes versus corporate income taxes, right? I'm just telling you, if Biden does what he says he's going to do, and who has any idea if that's going to happen, you will see a correction regardless of who wins. And then if Trump wins, it's going to keep going down because there's just no way to fight off reality forever. And you're going to see a boycott of so many things. You're going to see the velocity of money never rebound, right? Look at that. The velocity of money had finally leveled off, started to rise, and then about 2018, which is what I pointed out at the time, started to turn over, and then COVID took it off a cliff. We need the velocity. I mean, that's just monumentally low. That means dollars aren't turning over at all. Everybody's hoarding money. We need this to check mark up and then keep going. And we need it to get, it's probably never going to get up here again. But we need it to be in here somewhere at least. You know, that 1.5 level. If we can't get velocity of money to 1.5, we have deflationary pressure at one level while the government's trying to create inflation. And the inflation that the Fed creates is just, all it does is go to the rich because they're the most asset rich. So the most asset rich people make the most money. You have to get this economy to build through wages. You know, and that means probably some creative destruction and then picking out the winners. And there's going to be so many bad investors out there who just want to index. I think the indexers are in big trouble. They're bragging right now. Well, look, I just did nothing and I'm up. Well, okay, let's go back a little further, right? Let's take a look at some of these time periods. Yeah, your indexer here. Brokers are obsolete. I'm just going to invest on my own. Look how smart I am. Well, look, it took me 6 years to get my money back, right? And let's just look at some indexes. Let's take a look at SPX. All right, let's take a look at the S&P 500. Right? I don't know, I'll go all the way back there. But look, sideways for a whole decade. Then it rose. And then from here to here, that's 14 years to set new highs. How good did the indexers do from around 1999 to 2014-15? Their studies, their average return was about 2.5%. What does that coincide with? The dividend rates. They make nothing. So now we're in the era of easy money. We have seen this historically in the past. It almost always reverts about halfway back. So these are the peaks, wherever this peak ends up being, which looks like it's close, right? 34 to 16, half of that is 1,000 points, whatever. And Forex Analytics actually keeps pointing to this range right here, the 2016 area. This is where there was massive consolidation after a rally, and we were trying to normalize things. I don't know when it happens, but we're going to get back to here. I don't know when. It should happen this year, but we've printed so much money that it might not. It might not happen for 5 years. It might not happen for 10 years. So you better have a strategy for the insanity that has happened to the markets, where a third of the companies are essentially bankrupt. A third of the companies are essentially bankrupt. Think that through. Take a look at their balance sheets and just do the simple equation that I did with Occidental, Devon, and Continental. How many years would it take for them to pay off their debts? It's 30-ish for all of them. Are we going to use that much oil for 30 years? No. Oil demand's already flat. It was flat before COVID. So take a look at these companies, right? Alta was something that we recommended a little while ago, right? talked about it right in here. Jumped up, bounced off of that resistance level. I think it's probably going to revisit down here. Alta under 200, you probably should look at. Although, if we get a good correction, closer to 170, and this is really a pretty recession-proof company. Did it belong up here? Maybe in 5 years, but it doesn't have a lot of downside once you get in this zone, right? You could pull all the way back to this 1.68. It's probably what I have the bottom fishing price on. So that's what I'm looking at there. I mean, it could go further down. There's no doubt, right? Guess I'm going to update a lot of charts today. So, all right. Right now, why not sell call instead? On what? On Exxon, Hung? On Exxon? Well, if you're selling a call on Exxon, that means that you own the stock. Why the hell would you want to own the stock? Why would you want to own a stock that you're bearish on? And if you want to be exotic and use margin, it's not another way to short. I mean, if you're using margin, nobody here uses margin. If you're using margin, you're on your own. You should not be using margin. Anybody using margin is playing with fire. And I don't mean like matches. I mean like standing in a ring of fire and there's brush all around you. Yeah, you might be able to jump it or dig a path or something, but if you're using margin, you are making a monumental mistake unless you are a superstar trader. And for you to ask that question tells me that you're not. I'm doing you a service telling you to get out of your own way. There's no way that you should be selling calls on a stock that you don't like. The only time you sell covered calls is when there's something, usually a dividend stock, that you want to keep collecting the dividend on, but you're like, well, it's pretty high right now. I think it's going to pull back. I don't want to trade it really, but I'd like to collect some more premium to add to the income. That's why you sell covered calls. But to sell a naked call, first of all, if you're on margin, what if Exxon goes up? What if there's a strategic transaction? Your downside is unlimited at that point. Don't ever take a trade where you're that exposed. So no, that is not a way to do it. And it just tells me that you need to learn more about options. All right, it's a long enough session for today. It's been an hour. Have a good rest of the week and be careful out there. And all the signs are there. I put up the Newton's weekly technical analysis in yesterday's article. Read it. All the signs are there that this market's going to get weaker. It's just a matter of how weak and how fast.